All right. Hi, everybody. Good to see you all here. This is the third in a series of briefings that Recurrent is putting on for all about the used EV tax credit that's about to show up on January 1st. I'm Scott Case. I'm the CEO and co-founder of Recurrent, and I'm joined by my colleague.
Hi, I'm Liz Naiman. I am the content marketing manager for Recurrent, and I have been leading up regulatory affairs vis-a-vis the Inflation Reduction Act.
Together, this is the power team that's like sifting through all of the impenetrable text from the IRS so that you don't have to. So we're going to kind of start out. Liz is going to do just a review of the basics in case you haven't been following along, watching every single episode that we've done in the past, like I'm sure you have. So, and then there was this big document drop this week, so lots of new stuff, and we're only 2 weeks away from the start of this program. So I'm going to kind of cover the new bits. Yeah. All right, Liz, take it away.
All right, so this is just going to be a quick recap of the requirements as we know them so far. There still are some outstanding questions. And the top row here, the ones that are highlighted in pink, are sort of the vehicle and sales requirements for eligibility. The ones in the bottom are the buyer eligibility requirements. And kind of if a vehicle or a buyer or a seller fails on any of these points, then the vehicle is not eligible for the tax credit. So first, it does have to be sold by a dealer. This has to be a dealer sale. The vehicle has to be at least 2 years old at the point of sale. So to clarify, starting in 2023, when this program begins, that will be vehicles from 2021 and earlier.
Let me jump in here clarifying. So it is model year 2021 needs to be the consideration, which could have been built, in 2020, frankly, right? As model year 21 sort of not line up with the calendar year.
Yeah. In fact, I will just restate that for the record.
All right.
The vehicle has to be of a model year that's at least 2 years old at the point of sale. So starting in 2023, model year 2021 and older will be eligible. So again, that's model year, not the year that it was purchased or sold or put into use.
All right. So 2021 and older is what's eligible on January 1st. There's lots of other requirements, but that's the age of the car.
We also, and this is a big requirement, the sale price of the vehicle has to be under $25,000. And we are still waiting on some clarity from the IRS about whether that includes taxes and fees or excludes taxes and fees. I think we're operating on the hope and the assumption that it will be excluding taxes and fees, and I will get into that more in a minute. And then the final requirement for the vehicle side of things is that it has to be the first qualified transfer of the vehicle under this new tax credit plan. There are some updates to that Scott will bring up in a few slides. That's going to be the really tricky one for everybody to figure out. Quickly going through the buyer side requirements, the car does have to be purchased for personal use by an individual buyer. There are income level restrictions, which are $75,000 for a single filer, $150,000 for a joint filing, and $115,500 for a head of household filer. So that should, well, I think that's right in between.
I think it might be $112,500.
Yep, it is
for a head of household.
$500 for head of household.
I love that we're just nerding out on, is it 112, is it 115? We care about it so much so that you don't have to.
Finally, a buyer can claim the used EV tax credit once every 3 years, and that's 3 years from the date of sale. So if you go out and you buy a used electric vehicle and get the tax credit, and the date of purchase is January 2nd, 2023, then you can use it again January 22nd, 2026. So it's down to the day.
Okay, so that's interesting. The model year is based on the calendar year. The date of purchase is based on the exact date.
I think it's going to be interesting for particularly cars like Tesla, which may be priced out of this at first, but their sort of model year designations are not traditional.
Okay, so let's go and look at so what's eligible right now for this, like going into January, what are we looking at here?
Okay, so this is a chart from our quarterly market report, and this is actually we published this in early October, and so I do have slightly updated figures, but the story has not changed a ton. If you look at this, this is looking at the listing price of used electric vehicles. And as of October, we were talking about just over 12% of vehicles fell under the price eligibility. As of December 1st, we were at 14% of inventory listings are under 25,000 on their listing. Now, we do know that once things go from a listing to a sale, that number will bump up a little. So it might be closer to 20% of sales fall under that purchase price. And again, we're still trying to figure out if that 25,000 is the total price, including taxes and fees, or if it's just the price of the car. Now, some interesting things drop out of this data, and I will do a quick recap, but again, we will have links for you if you want to go a little bit deeper. One of the interesting things that comes out of this is that plug-in hybrids are really going to lead the way in terms of what's in inventory at this price point. It works out to be around 50% of the inventory under 25,000 are plug-in hybrids. That is great news for those of us who are pro-electric vehicle, because plug-in hybrid drivers tend to get battery electrics as their next vehicle with a 3-to-1 margin. And I'm sure that that will accelerate.
All right, hang on, Liz. Let me just make sure I'm playing the voice of the audience here. What do you mean by plug-in hybrid? Is hybrids like Priuses? They're hybrids, right? Do they count?
So you need, in order to qualify for this tax credit, a car needs to have a 7 kilowatt hour or larger battery. So traditional Priuses that you don't plug into an electric outlet, they don't qualify. Meanwhile, something like the Prius Prime that you can plug into your electric outlet absolutely will. So
Okay.
pretty much anything that you plug into a wall, whether it's in your garage or at a fast charger, that will qualify.
All right. It has a plug, it's in. I mean, there's other requirements, but from that requirement of, is it an electric car? If it has a plug, it's an electric car as far as the IRS is concerned.
Yep. And in fact, I think we've replaced that with clean vehicle at this point, because this also does technically cover green hydrogen. Another interesting thing is, I know we had talked a little bit about the model year requirement and how starting next year, 2021 and earlier model years will be eligible. So when you couple the model year requirement and the price requirement, it actually looks like nothing earlier than 2019 will qualify. So we're certainly looking at some older cars, still some great bargains. But what we're talking about, if you look in 2019, we have some of the Fiats, the 500Es, some Ford Focus Energies, maybe a Leaf S, the lowest trim of a Leaf. Some of the other cars that you may see in this eligibility pool, we have some, and I'm pulling this from some of the research we have on our site that we do update. 2017 Mercedes B-Class, which is a plug-in hybrid. The Chevy Volt, which is a great car, people really love it. 2018 and earlier. 2018 Honda Clarity, another plug-in hybrid. The Hyundai Sonata. And then if you're looking at purely electrics, you're looking mostly at sort of lower limited range vehicles, such as the Volkswagen e-Golf, the BMW i3, and then sort of the star of the show in terms of this eligibility would be the Chevy Bolt. And that's Bolt with a B, it's the battery electric, which is the best range you're gonna get for anywhere near the 25,000.
Okay. All right. So what we learned this week, there were two big document drops, one from the IRS, actually one from the White House that kind of clarified some things. So one thing I will say is that the original language of the bill said that a car, if it has not been transferred before, it doesn't matter whether it had been transferred prior to January 1st, 2023, everything was potentially eligible. So there were no qualifying transfers that would have knocked one out. They did, and they clarified a bit of a mysterious change to say, if a car has been transferred to a qualifying buyer between August 16th, 2022 rather. So this past August, right around when they signed the bill, and December 31st, 2022, it would now not be eligible for a credit. Now, it is impossible for those cars to actually have received a credit during that period, but the language of what the IRS just said is that for some reason they're disqualifying vehicles that had a transfer in that period from getting a future credit. Now, this one's a bit of a head scratcher, and Liz, maybe you can weigh in on why you think they did this. But from our perspective, we don't think there's any mechanism the IRS would sort of see a transfer here, because no one would be filing for a tax credit on transfers during that period. So a little bit of a head scratcher about why this date eligibility shift happened.
So the best I can understand is that this was getting a little bit of getting signals crossed, and hopefully this was an error. So August 16th, 2022 is the effective date is the date that this act is effective. So that was the date that the final assembly requirements came into play for the new tax credit. That meanwhile, it's very clear in the text of the document that the use tax credit, the 25E portion of the act, does not go into effect until January 1st, 2023. So I've reached out to some people to try to get some clarity on this, and hopefully this was a typo.
Yeah, well, I would say, yeah, I mean, by the way, neither Liz or I are tax lawyers, so let's be clear about that. We have some friends. We have some friends of the company who are, but you know, I would say it's probably unlikely that cars are going to get disqualified. That there will be transfers that sort of a car that got sold within that sort of 5-month period ends up getting knocked out for later. But we'll have to see how this plays out.
It would require, sorry.
Go ahead.
It would require reporting on the sale and reporting on the purchaser.
Yeah,
because part of this, of course, is the first transfer to a qualified buyer, which means a buyer who meets the income requirements.
Yeah. So I don't think that any cars are going to get kicked out because they got sold in between those dates. Is the sort of bottom line from where I'm at.
Fingers crossed.
All right, so second one, this one doesn't really affect either buyers or dealers, but it's just sort of an interesting note that the IRS noted this week, is that automakers will have to provide the IRS with historical lists of all tax credit eligible vehicles by January 2024. And that makes sense for new cars, but they're also going to have to go back and say, hey, all of these VINs that we sold in the past, or we produced in the past, I guess, are eligible for a used tax credit. And they're essentially certifying, hey, we put the battery size is big enough, basically, is what they're kind of saying. So that, I think, is just sort of an FYI. I suppose it's possible that some automaker doesn't get their act together and they don't file that information with the IRS in January 2024, and therefore, like, the tax credits that people thought they were going to get from a used perspective during 2023, like, kind of get held up. But again, I think the manufacturers will be able to figure this out. So just an interesting point that was filed there. If you are a manufacturer, make sure you file. You know, it's not just about the new cars, it's about the used cars as well.
It also does seem like once the automakers have submitted this, it should make it somewhat easier for a VIN check. Of course, that won't be until January 2024, but it seems like at that point, it would be pretty easy to run a VIN and see if it cross-check it against this list. Yeah.
The nice thing is that the rule that we just said earlier, if it has a plug, it's got at least a 7 kilowatt-hour battery. I think you can take that to the bank. So, all right. So next one up. So dealers have some reporting requirements for this. So there are, I'm going to talk about what information that they have to report on the next slide, but they have to do two things. One is on the date of purchase, so no later than the date of purchase, the dealer has to provide some, essentially call it like a reporting information to the buyer. So that's something that starting on January 1st will have to start to happen. Now we've got the information that available. I haven't seen an IRS form, so a little bit like, I guess, like you're within the letter of the law or the letter requirement if you sort of provide a piece of paper with these 7 pieces of information on it that I'm going to talk about in a minute, but it has to be provided to the buyer on the date of purchase that's the latest possible. Now, the second thing the dealer's got to do is provide the IRS with essentially the same information on all the used sales that you made as a dealer. In all of 2023, and the deadline to providing that is January 15th, 2024. So again, report out to each buyer, hey, this is the way we calculated your credit on date of sale, and then report to the IRS, here's how we calculated all of the sale credits that we did in this past year on January 15th, 2024. Let me come back to the information. It's actually pretty straightforward, but let me come back to that in a second and just say the last thing that we saw this week is just a clarification on that for used cars sold in 2024, starting January 2024, that the White House clarified that buyers, so used buyers, will be able to transfer the credit, that up to $4,000 credit that they're receiving on a used sale, to the dealer that sold them, or potentially to a third party. Actually didn't specify that, and in exchange for a cash discount on the sale. So that now all of a sudden, and there's no obligation that has to happen, but the buyer can say to you as a dealer, hey, I'm going to transfer this $4,000 credit for you. You can then offer, you can reduce the purchase price of the car, and then you are basically getting paid back by the IRS through some mechanism that has not been defined yet. Now, to be clear, that's for car sales starting in January 2024, so we've got some time to figure that out. That is not the case for all car sales in 2023.
So Scott, I hate to actually you, but it's
oh boy, yeah, I did it to you earlier, so let's go. What do you got?
So I'm looking at the document that the White House released this week, and the transferability is only to the dealer at the point of sale.
You got me.
Okay. And that includes Indian tribal governments, and the text of the act does define what a dealer is. So I know that in our inbox, we've gotten some questions about that. So that is laid out.
All right, got it. And if you want to go and read on your own, the web address here, irs.gov/pub/irs-drop, good Lord, rp-22-42.pdf. It is so exciting. I could recommend going in there and reading the whole thing. All right, so the reporting requirements, what's in those reports, right, to the buyer and eventually to the IRS. So it's pretty basic, name and social security number of taxpayer, the buyer, the name and the tax identification number, the EIN of the dealer, the VIN of the car, the battery capacity in kilowatt hours, the date of sale, the sale price, and then essentially the calculation of the credit. So that's $4,000. So it's 30% of the sale price up to a maximum of $4,000. So it is possible with some lower price cars that it won't get to 4,000, but we're really, I think in most cases, going to be 4,000 because you'd have to have a car that's selling for less than 13,000 bucks. Just not many out there. And then the last is just sort of like a line that says, I hereby tell the truth and all the truth and nothing but the truth. So it's an attestation that just says, I'm good. I'm telling the truth here. So same information is provided to the buyer as is eventually to the IRS. Although the nice thing about the IRS one is that it's just going to be a one-time dump of all the information that goes out there. All right. One last sort of exciting thing. And this is like what's interesting. So the IRS opened a public comment period for about a month between October and November, and they got a lot of comments. And this is about the entire Inflation Reduction Act. And so we put in a public comment filing, and as did a lot of other people in the industry that were specific to the used EV credit. Now, what I think was interesting is what in the clarification of the reporting requirements that just came out, what there was no mention of. So I think that's like, if they didn't say something about a question, I think that's like an interesting sort of statement as much as if they did say something. And so we asked about a lot of different edge cases that we wanted to clarify on, like, hey, are we sure that these sort of specific edge cases still do count? And mostly we were looking at, because each car can only receive one tax credit. Each VIN can only receive one tax credit used at most during its life. And so we were trying to figure out, like, we're just making sure that we were, in our view, like, often that credit won't be applied the first time a car is sold. It will be the second or the third time the car is sold, used. And so we want to just make sure that, like, hey, are any of these cases, if it's sold to, the first resale is above 25,000, the first resale is to not an individual but a commercial entity, the first resale is below 25,000, but it's not to a buyer who has an income qualification, or maybe the buyer does have an income qualification but doesn't claim the credit. Like, all of these different edge cases, which our belief was, like, none of these should disqualify the VIN from a future credit. And the fact that they did not say they didn't take any stance on those, I think, on these cases, to me says, these are probably okay, but we'll await further clarification as we go. The last two that were in there, you can read all these, but again, they didn't comment on any of these. So at this point, these are all inbounds, but the last two I think are interesting edge cases that we have gotten questions from dealers about specifically. One is, like, what if the buyer is an individual who buys it as an individual, but then they use it for ride sharing, essentially, or for gig work? Is it a individual buyer? Is that the important thing? Or is personal use, is that the important thing? And the IRS, I think, is saying, hey, it's an individual buyer, kind of whatever you do with it.
That was the implication I took from the guidance this week as well.
And then the last one was just like, what if the car is a branded title? If this car has been totaled and then restored, is there any reason why those would be disqualified? And the IRS did not say anything about that in the document dump. So also our belief is these are inbounds as well. All right. I'm gonna do a what's next here because we're kind of running short on time. So January 1st, this thing is live. So ta-da. We're expecting more kind of like information to come out, like, at the 11th hour. So we're going to be watching it, and we will put up, we're planning to do another briefing the first week of January, just to, like, get all the last minute stuff. And I would just encourage you all to sort of tune in and or ask questions by email. Again, Scott at Recurrent Auto or Liz at recurrentauto.com. And we'll try and, like, get those and help figure this out for the industry. Well, thanks everybody. So excited for this program to roll out on January 1st and help figure this out. So see you all in the new year.
Happy New Year.